Well, good morning, traders. This is Blake. You are listening to the F.A.C.E show, and happy hump day. You know what that means? Yeah, get the humping. It's hump day halfway through the week. Happy hump day. Man, I tell you what, what an amazing market we have. Hopefully, you guys took advantage of that. I'm going to talk a little bit about how the market responded to yesterday and kind of what we're going to be looking for in the hopefully the days ahead. But first and foremost, I want to discuss something that's really jumped out at me is this dollar yen. I know overnight, and I was looking at some of these comments that had come in. You can find them on Live Squawk here if you want, or you can go into the ForexAnalytix chat room. One of the probably the easiest ways for me is to go backwards through the chat room in the community, and I can go and see exactly what was said, and then some of the conversations about what Ryan and James were having regarding the BO, or excuse me, the new incoming or the new prime minister, Ashiba. But instead of doing that, I actually have Ryan here for you. So Ryan, good morning. Happy get to humping day.
Yeah, morning, mate.
Morning.
How's it going?
Good. I'm sorry. I was just sipping my coffee because it's 4 o'clock in the morning. Oh no, it's 5. It's early here, and so I was just looking at the yen, and it's not only the dollar yen. You got a lot of other yen pairs that are actually screaming higher. And this seems like we didn't have we weren't even thinking we had a prime minister coming in that would give two shits about what's happening with the BOJ, but it seems like he does. So what's going on with Ashiba and his comments?
Well, we've got a bit of an algo fest going on. He's speaking on both sides. He basically wants the BOJ to be cautious with its hike path. And despite him sounding like he's against BOJ policy, he also said first thing over in Asia that he agrees that it's down to the BOJ to decide policy as they see fit, as long as they take financial conditions and whatnot into account. He had his first meeting with UEDA today, which the market is obviously looking at for first comment, but these meetings are regular. They're always speaking together. And again, there, UEDA says we will hike when the economy matches our outlook, which has always been their message, and taken into account, the caution and financial conditions and whatnot. So there's no real change happening. I don't think Ishiba is uber dovish on the BOJ and telling them don't hike or whatever. He keeps acknowledging that even while hiking, they're still going to remain accommodative. He just doesn't want them to rush, and we know the BOJ isn't going to rush anyway. So the market's making a bit of a fuss about it, as algos want to do. But the wider picture hasn't changed. The BOJ will hike when they feel it's time to hike, and no sooner, no later. And that's the end of it.
Well, the one thing that's happening, and this is to me, whenever I see inefficiencies in the market, let me explain what an inefficiency is. And you can see it clearly right here in the US dollar Japanese yen. This is when you have lack of liquidity. This is the squeeze that was happening as the market was preparing for a potential Takashi female prime minister, and they were just thinking this might happen. And then when they found out she lost, when the market found out she lost the race, there was just this big, like I said, lack of efficiency in the market, a lot of gapping. And to me, whenever I see something like that, we tend to revisit those levels. Not all the time, but there's a very, very strong argument that we will revisit that level at some point in the very near future. It's kind of like a gap fill. When you see gaps and people are like, oh, gaps always get filled. Market inefficiencies like this do too. So, and then you look at the current development in the dollar yen, And that makes a lot of sense because the bull flag pattern, as you see here, would actually complete about where that inefficiency started. So I think we're going to end up doing a whole round trip. And what's going to get us there, Ryan? I mean, I would argue that we have ADP data coming out today. We have ISM services tomorrow. We have non-farm payroll on Friday. Those are all good reasons we'd actually could see continued dollar strength and maybe some rise in yield. So let's talk about yesterday. And I'm gonna, before we even get into what happened with Iran, let's talk about the ISM manufacturing data that we got in the market yesterday. So Ryan, how did you read that ISM data yesterday?
Pretty weak.
Yeah,
Weak
it
on
was,
jobs.
right? It's like
Weak.
it seems pretty crappy data, right?
Well, that was a big swing in prices paid, down to 48.3, I think, from 54 something.
Yeah, let me I'm pulling it up right here. I'm just getting to it. Sorry, I was just kind of floating around. Here you go. Here's all
There you
your
go. Yeah,
ISM data.
48.3 from 54. That smells a bit like maybe a bit of a skew, some sort of one-off factors. We haven't seen such a big drop for quite a while, but the data is what the data is. There's also a big pullback or further pullback in employment as well, 43.9. Manufacturing, we're talking about whether we're seeing hiring or firing. Manufacturing is the only sector that has seen job losses really, and that's picking up a bit of steam just going by that ISM. But for the rest of it, you're right. Dollar yen, we've both been on the same side of this one. Buying dips. I guess I'm a bit sore because I got knocked out my longs on my trailing stop yesterday at 143.20. If we get softer data, then we're probably going to see a bit of a top put in as the pendulum swings on 25, 50 rate cuts, and I keep saying keep an eye on yields. A lot of this move is following yields. We've seen twos pick up again, tens picking up a bit again, but that's a bit of a limited trade because yields are going to top out somewhere. I think tens maybe 385, 390.
Oh, my
Because
chart
whatever
says
happens,
402. Well, I don't know what you're
well,
thinking.
the chart may say that, but the Fed is saying something different if they're starting a rate cut phase. Yeah, and 2-year yields as well. They're ticking up just slightly. They're still coming off that 350 level. But sorry,
They look
going back to
squeezable.
tens, that was a decent hold at 370 yesterday. In the 10 years, so that was a significant move. I think I had that as a level down there. Pretty much bang on the dot. We hit 370 before bouncing up again.
Yeah.
So yeah, while we've got this feature that the Fed's talking 25s, the data's not doing too badly. The market's got over the excitement of a 50 pip cut. Yeah, I think dollar yen is still a bit of a dip buy while yields rally, but that's a limited trade, as I say. Get yields up to 385, 390. That influence will start to wane because the bond traders will go, no, this is going too high for what the Fed's doing.
Yeah, and Forex trader says, but dollar remains strong despite weak ISM. That is because, well, yes, we did have as you pointed out yesterday in the chat room. I think the market's going to be focused a little bit more on jolts, but that isn't what the market's really focused on. The market is kind of focused on some rogue, big swinging, dick nuclear armed country out in the Middle
Yeah,
East that's lobbing missiles everywhere. That's why
yeah,
the dollar actually firmed up. So we got
exactly.
that was the real news of the day yesterday that actually got the dollar going, and boy did the dollar go, right?
Yeah, and that was that dip in yields. The market run into the safety of treasuries.
Yep.
So the yields got bought. Excuse me, the dollar got bought as well.
Mm-hmm.
This is one of those situations you have to know what's driving it. Right now, we've got no data bar ADP coming up, so the market's all about risk and what Israel's going to do, whether it retaliates or not.
And so
If that all
let's
settles
start.
down, then we'll move to
Oh,
data.
yeah. So first thing we're gonna have to deal with is obviously the data, which is coming out in about 5 minutes. And then I want to talk a little bit about the Middle East. So make sure you all stick around because obviously, well, the thing that we have to be, I think, most aware of yesterday was a pretty easy trade, and that's because the dollar strengthened. I'll tell you, Ryan, you were sniffed it out. You're like, "Yeah, I think this is going to be a lot like April." And then once they said they announced the moment they announced our response to Israel has concluded. That just told me right there at that very second in time that it was a complete show and it was complete theater. And I'll just show you what I did in the dollar. This is exactly what I ended up closing out yesterday. I closed out the pound for 133 pips, Aussie for 36, Kiwi for 22, dollar CAD for 13, dollar MEX for 900 pips. I closed everything out and I was in full size across the board. And I went along with my day and I made some really good money yesterday because Ryan, you pointed out in our chat room that you thought it was just a repeat of April, and that it was. But I'll tell you what might not be a repeat of April is what Israel's response might be today, and that is where it's going to get tricky.
Yeah,
what do you say about that?
that's exactly what we've been talking about this morning. Last time, Israel did stuff, Iran retaliated, and then it all, evened up and they moved on. And it's the same situation now. Israel's been doing what Israel's been doing. Iran's retaliated. Again, they're now even on the action. It all depends now on whether the Israel retaliates against a retaliation. If they do that, then we've got an escalation. And
I
that's
forget
when oil's going to pick up and we're really going to see risk move.
Yeah, exactly. And I forget who it was in the ForexAnalytix chat room that said it yesterday is don't forget what Netanyahu said about, like, if Iran strikes, we're going to strike harder. And, I think it was Leon in our chat room. Anyway, guys, if you think this is over, I think we need to, keep our ear to the ground right now and be really careful about what's happening over the next 24 hours. Because as Ryan just pointed out, if there is a response, and Stelios, hold your words. I know you're here, and I know you probably got a few things to say about this, but I'm going to grab you after the data comes out. I think what we have to be watching is this crude oil price, as Brian just pointed out, because if we squeeze past this resistance, that means things are probably accelerating, and that means crude accelerating not in a good way either. And that means crude oil is probably going to be trading back in the higher, $70 range, closer to 80. We're going to probably get a massive squeeze out of crude oil, which could really, get the market a little concerned about what's happening. So anyway, I'm going to come back to that here in a few minutes. And like I said, I'm going to bring in Stelios in just a few minutes. But what I want to do is we have ADP non-farm coming out, private sector jobs. Ryan, what are we looking for as I get set up for this? What is the market looking for as far as ADP goes?
A little bit of a bounce to 124, 125,000 from the 99,000 we saw last month.
Do you think right now is the time we need to be, writing off the U.S. economy? Do you think the U.S. economy is going to shit, the labor market's going to shit the bed, like as of today?
No, I doubt it. But you never know with these numbers. That's the beauty of these and the NFP. You can get a minus 200 as easy as you can get a plus 200. But I will laugh if these numbers come in strongly, and particularly the NFP. If we get a 250 print, with the market, that's going to make the 50 cut seem even more ridiculous.
So down below, you'll see the ADP data is right here. We have about 30 seconds. This is Data Flash. Data Flash comes with ForexAnalytix. By the way, if you guys aren't, we extended the 8-year anniversary sale through the end of this week. So make sure you take advantage of that. We did it because it was the first of the month and people wanted to be able to pay for their annual subscription. So we had to wait for payday. So take advantage of it to get all these tools and jump in the chat room with Ryan and myself for like 15 hours a day. Woo, doesn't that sound like fun? We have dollar index to the left, S&P in the middle, and yields to the right.
143.
Good number.
143. Good number.
Good number. Good number. Oh, but
Hilarious.
look at it's all about yields popping higher and the dollar yen is popping higher. So that is a good, and it revised higher too. And I'm going to do a little bit of Dale. That was a
Relatively small reaction, though,
number. Oh,
right?
Stelios, did you come in to sing with us?
It's a
Oh,
relatively
don't
small
start
reaction.
singing, please.
Everybody's waiting for NFP. That's the thing.
What?
And
Why?
why?
Why? I'm joking. I'm
By the
just
way,
being
you were talking
facetious.
about the potential escalation. We have to remember that the United States have said officially that they're ready to support Israel, etc., etc. So this escalation could become a big escalation. So um, you know, let's keep an eye on what's happening. It's
It's a little
definitely
tit for tat right now, right?
a lot of risk out there, yes. And I think the markets are kind of underpricing the risk. If you look at equities, yes, we were down yesterday, but still very resilient, still above 5,700 in the S&P. So unless, the first nuclear bomb is launched, I think we still grind higher.
Let's hope not. Let's hope
I hope,
not. I mean,
I hope so, yeah.
that's obviously that's the thing that no one wants. It's interesting. I watch a lot of people on social media, and I watch a lot of obviously, and I watch a lot of people around, like, just their commentary. It's like, do you be careful what you wish for? I mean, I am a combat veteran. I know I don't, not a lot of people know that here. But it's not something that we want. No one wants that. So, let's hope we don't start lobbing missiles at one another, like nuclear ones. A couple of things I want to point out this morning is if you got, and still, I want to hear some of your commentary here, because not crude, gold had a nice little boost yesterday. This is a really sheer reaction of fear. We had gold moving up, bonds moving up, yields going down, but dollar strengthening. All really risk and yen strengthening actually at the same time. So what do you make of this move in gold? We weren't able to take out highs.
Yeah, you're right. I think a correction is still in play for both gold and silver. And it makes sense because they've been going bananas over the past weeks, and correction is something that's logical. If you recall, I took some of my silver off above, and I have my bids in at 30.61 actually, if we get there. But yeah, especially if we get a good NFP on Friday, I think yields go up, dollars goes up, metals go down. So, but for me, the main theme is still intact. We're going a lot higher, and you were talking about Powell before and 25s, 50s, etc. In the last meeting, they cut 50, but
Wait,
inflation is
I
still.
didn't wait. I didn't say anything about Powell today. Ryan,
You
did you
talked
say anything
about
about
the
Powell?
Fed. You said something about the Fed doing 25 or 50.
Man, you are just imagining shit.
Yeah,
I didn't
but
say
let
not one
but
word about Powell. I never
but
mentioned Powell, but go ahead.
but look, okay, Bernanke then.
It's only 4 in the morning and I remember that. All right, go
So
ahead.
in the previous meeting they cut 50. Inflation is ticking down, yes, but it's still above 2%. Unemployment is ticking up, yes, but it's still in the low fours. GDP was what, 3% the last print or something like that. So you look at those numbers in isolation, there's no reason to be cutting, let alone 50. Of course, they are trying to anticipate the um, kind of downturn in employment, basically, not inflation that much. So, if you ask me, what are they doing? Why did they cut 50? They shouldn't have, but based on the numbers. But given the fact that they always are on the side of caution, I think they're going to be doing another. And I know it doesn't make any sense, but I think that's what they're going to be doing. Um, we have the elections coming up. You know how it works. Nobody wants to see any kind of crash before elections or any kind of downward trend. So keep things afloat, and then we see what happens.
Yeah. Okay. Well, I want to talk about, I want to actually, there's a few things I want to talk about. This port closure that's happening, with this big strike. It's a big, it's a lot of ruckus as far as I'm concerned. What's even a bigger pain in the ass is I had to go I had to go to Costco yesterday. No toilet paper. Toilet paper completely gone. And the last few things of toilet paper, there was a bunch of dudes running around with like 4 or 5 things of toilet paper. And I was like, I asked the Costco guy, one of the Costco guys, I'm like, has this been happening all day? And he goes, yeah, it's so stupid. We get all of our stuff from LA. Like, this doesn't even affect our ports. He's like, but these jackasses are running around like we're going to have some sort of supply shock around here. And I'm like, that's so crazy. But that's the mentality that's happening right now, and the market's getting a little worried about the situation that's happening in ports, and rightfully so. I mean, it could have a severe disruption if things prolong here in the United States. So it's one of those things that I think we keep in the periphery. We get through this weekend, and there still isn't some sort of union agreement on wages, which they're asking for ridiculous amounts of money. I'm all for unions and the union workers, but the money that they're asking for is pretty silly. And in election year, you can think it's politically charged. I know you guys might have some commentary about that. I just want to say seems a little fishy to me. Regardless, it could cause some disruptions here in the U.S. That's the point I wanted to make. Couple other things that we should discuss really quick is where the dollar is at and where we're trading. So I'm gonna just take you through a couple of charts. If you look at the euro's consolidating. We broke down below this ascending trend line. We're at the 78% retracement. Now we're just consolidating losses. So whenever you consolidate losses, you have a sharp move lower, like in this case, then you don't go anywhere. That's usually a pretty good indication that we're going to resume a trend to the downside. So in this case, a completion of the flag pattern that you see here is going to take us back to 110. I got a comment from I got a message from Mark Chandler. Some of you guys know who Mark Chandler is. Yesterday he sent me a message of something he was going to send out to his clients today. So I posted in our chat room for you guys to read. I don't know where it is. I think it's here from last night. Oh, right here. Yeah, FYI, this is from Mark Chandler. He's looking at a potential big double top, which, he deals with a lot of Bannockburn is all institutional. They basically help a lot of individual companies that move a lot of money internationally. He helps them like kind of navigate their exchange rates, through, bigger transactions. If you're moving several $100 million and the euro goes from 110 to 108, that's going to have a huge impact on your bottom line. That's what his company basically does. If you don't read Mark Chandler's stuff every day on Trader Summit, we post his analysis on Trader Summit every day. Anyway, this is a big double top that might be developing. So if we get much below 110, there's a lot of downside there. Now, I want to ask Ryan this. Ryan, do you think we could get a big rally in the dollar that could take us back to 108? There's so many people that are looking at 130 in the euro or 120 going into 2025. Wouldn't that be something if we drop down to 108?
Well, it's always the way. When the market's falling, everyone's picking the downside target. When it's going up, everyone's picking an upside target. Right. Of course, we could go down there. I don't think it's a viable opportunity right now. The only real way we'll get there is if the Eurozone economy tanks, US heats up, or we get a big risk event where everyone runs to the dollar. Yeah. I've been saying it every time we were trading around 112 the last few days and couple of weeks. I've been saying if it breaks 111, we probably see a quicker move lower, and we got down to 110.45, I think, yesterday. So we've that's taken the pressure off the upside because all those longs above 111 are probably out now. The trend is still remains. The uptrend since July is still well entrenched. We're above the fib levels. We're above the fib level of the July move. We're 38.2. We're above or trading around the 50 of the August move. So the trend is still well entrenched. Okay. At the moment, this is just a pullback. And if we get back above 111, then we continue on up. But if we don't, and we're looking like we're holding that key 110 110.70, 75 area, then I wouldn't rule out a test of 110, and I'll probably be a bit of a buyer down there again.
I'm just again kind of looking around here. We got the euros obviously trading really heavy. Sterling, nice bear flag after coming out of a channel, and now we're probing 132.50. Really, really big support. It's a big breakout point. You can see that commodity currencies are now starting to look a little, wobbly. You got the Aussie that's struggling now above the 69-cent level. You got the Kiwi that's trading a little heavier, false breakout now developing. Dollar CAD's actually, I know it has a false breakout from last week. I'm still playing this one to the long side myself. And its pullbacks have been fairly minor. You look around, and then you got the dollar yen that's up 1% right now, and again looks like we are going to trade to 146 today. So when you have like this dollar like that looks kind of firm, I know we don't have any other data today. I think that was pretty much it for today as far as economic data goes. We do have crude oil inventories a little bit later, but we do have some FOMC members speaking. Hammock, Musa Lamb. I don't even know those guys. Now I have to do some research. Damn it. And it's 5 o'clock in the morning. The last thing I wanted to do is a little bit of research on what those guys might say today. But we don't have a lot of data today, but tomorrow is going to be a big one because we got unemployment claims and we got services PMIs. So I guess today we're going to be on Israeli watch list, right? I mean, that's what today is going to be all about. Israeli watch?
Risk watch.
Wrist watch?
No, not risk watch. Risk.
Watch. Did you say whisk? Are you whisking?
Whisk mops.
Okay. All right. Enough messing around. I thought we were going to have an interview today with Larry Tantarelli, but looking around, I want to make sure, Larry, if you're here, let me know. I thought Larry was coming in today, at least Dale thought he was coming in, but we might not actually have an interview today, but we just have a few minutes. But while we have just a few minutes, and if Larry doesn't end up showing up, then we'll just gonna have a short show today, which is fine by me, because now I got to go do some research on Mussolini. No, who am I doing research on? Musa Lamb?
Museum. Fed's
Museum, and then Hammock. Hammock or Hammock? Hammock?
Who's Hammock? I don't know that.
Hammock sandwich. Anyway, Ryan, what are you thinking today is going to be, as I mutilated everybody's names out there, what are you looking today to trade? What's hot on your radar? What are you thinking?
Well, I'm managing my euro dollar longs, which are looking a bit iffy, as I said, holding below that 70, 75 area.
Oh, sorry, I didn't mean to draw that bear flag pattern on you. Here, let me delete it if that'll make you feel better.
Go ahead. You can keep your flags waving. You lot love a flag waving over there. I think dollar yen is looking interested. I'm thinking 147 might be a bit of a top if we continue this move. So I'll be keeping an eye on that. I'm at the moment, I'm just waving this one goodbye as it rallies without me. But for the rest, your Aussie dollar cable, they are looking a bit like they're struggling up here. But I think that's probably the risk factor. China's been shut. It's shut for the rest of the week. So I think we might have to wait until they're back before they start taking stocks high and we see risk coming back again. But it's really one you've got to be careful. You can be sitting here and get a headline in 5 minutes that Israel's done something, and we see another move to risk. So I'm keeping my powder dry a bit today.
You know who's really far from Iran right now? China. I mean, look at the Chinese markets. I mean, up 35% in 2 weeks. Are you freaking kidding me? Seriously, like
people are starting to call it a bull market.
I'm glad they're ahead of the curve.
35% in 3 days, and everyone's bullish all of a sudden. Shock.
Yeah, this is what, as K-Man would say, furthest away from my bed is probably China right now. So China. All right. As we go into North America, Stelios, I know you are not an active day trader. You like to position
Uh,
yourself a little bit more longer term, like 30 minutes to 45 minutes type of trades.
I am looking at 10-year at the moment because 10-year US
Oh,
10-year US is at 3, we're almost 80, and 382 is the previous high, and also the 50 DMA. So that's going
yes.
to be important. If that gets broken, I think we're going to 4%, which also means dollar strength, equity is lower, and commodities, metals lower. So that's just for a shorter move. This is something that I am watching on. I do have a bid 3061, as I said, in
Ooh.
Le Silver, and see what happens. Actually, interestingly, you saw what happened yesterday with metals versus cryptos, right? That was a proper event of danger, geopolitical danger. And what happened? Cryptos followed risk lower, and metals went higher. So we have a good idea of what cryptos are in essence, and they are a really nice risk proxy. That's what they
Yeah,
are.
they really are. And I mean, Bitcoin is I mean, we've been playing into this false breakout in Bitcoin. I mean, it has gotten our attention. The move above the 65,000 level suggests the false breakout, move back to the 50 DMA as possible a couple of days ago. As you can see, we slid right back down. And here we are at the 50 DMA. That was 2 days ago, and yesterday we hit the 50 DMA, and it looks vulnerable now. I mean, these cryptos look like they can correct. And I'm not going to sit here and tell you the Bitcoin's going to 35,000, but it does look like we could slip back down into the 50,000 mark, especially if risk gets a little bit carried away. Let me reiterate this while we have everybody here, and we're going to continue on for a few more minutes. If you guys haven't taken advantage of the 8-year anniversary sale, do it. It'll be gone this week. We just left it up for a couple more days, and take advantage of these discounts because people wait all year for these prices. Jump in the chat room with us. Come see what we're talking about throughout the course of the day. All the conversations that are happening, all day long. This is all day yesterday. And you can see what I'm running throughout, what kind of positions I'm running, where I'm taking profits off the table, where I'm like yesterday when I unloaded all my dollar longs, and I went literally almost flat to, let's say, closed out my euro yen. I played that on the long side, and then I went basically to long just euro sterling. But then I put on some other positions last night. So but yeah, to learn all that and know exactly what I'm doing and be able to talk to me about it, because that's what traders do. They're like, hey Blake, why are you long this? Why are you long that? I ask Ryan why he's long dollar yen all the time, and he tells me, right, Ryan?
Yeah, after I've traded it because I don't need to put in the stoppers on it.
Thanks for that. Thank you for that. I always appreciate it. Hey, speaking of these yen pairs, let me just share with you really quick. You look at these pullbacks. I'll put it this way. Euro. I'll just make it real fast. Euro yen holding the 618. Pound yen holding above a 50% retracement. Aussie yen 38% retracement, breaking higher out of a triangle, which that's a shallow. This is a bull flag, bullish pennant, if you will. Shallow retracement, breaking higher. Kiwi yen, same thing, 38% retracement, trying to break higher. I would argue that we are trying to do it right now. Canadian yen, obviously because of the risk that we have associated with the Middle East, you can see the strength in the Canadian. I did have a question from one of our traders that I didn't have a good answer for yesterday. Norway.
The CAD knock one. Yeah.
Yeah. Norway was extremely weak yesterday, but the Canadian wasn't. Do you have any feeling for that? Why that was the case? I mean, the dollar CAD, as you can see, the dollar CAD really struggled to move higher during risk off, but dollar Norway actually went whoop and went right up.
I think it was our new friend Surab asking about that. Why knock was following or wasn't following oil. it's, as I said, you've got to know what the driver is. You know, when it's a risk off move, you may see oil gaining, but it doesn't mean commodity companies are going to gain, particularly versus a dollar. If it's a risk off move and the dollar's getting bought, it's going to get bought everywhere. And the dollar CAD is just caught in the flux of that, the higher oil, higher dollar. You know, and that's when you need to look at the crosses. You know, move away from the dollar, look at the crosses and see what NOK and CAD is doing, and then you get a better feel as to what's moving dollar NOK, for example. So you look at NOK SEK and you look at Euro NOK and the likes, and Euro CAD, and then you'll get a better idea of you know, what the real driver is.
Right on. You know, I appreciate that, Ryan. Hey, look, today, like I said, Larry Tantarelli, I thought was supposed to come from Blue Chip Daily. I thought he was supposed to be here today, but he's not. But tomorrow we're going to have a really good interview. Joseph Wang is going to be here, and I'm going to actually let Stelios interview Joseph Wang tomorrow. Just kidding, Stelios, unless you want to. I mean, but Joseph Wang's going to be here, and maybe we'll all sit around and have a little fireside chat with him. He's always great to get a view on what the Fed's thinking. So make sure you guys are around for that. And like I said, if you guys missed the sale for ForexAnalytix, you didn't. We extended a couple more days to take advantage of it. And you know, I want to thank Ryan and Stelios for being here today and keeping me company. Appreciate you guys.
Yeah, and thanks for holding the fort while Dale's away, doing a sterling job, mate.
Yeah. And well, thank you. I appreciate that.
I won't say that when Dale comes back. I'll say you've done a terrible job, and please don't ever leave again.
I love it how you spoken like a true Fed official, right out of both sides of your mouth, my friend. Stelios, thank you for being here, and I hope you're feeling better.
I am feeling better, and it's good to be here. I'll be here all week.
Well, of course you're feeling better. Precious metals went higher. Of course you're feeling better. Amazing how that happens, right?
Isn't it?
Nice to have you here all week. All right, guys and gals, and I want to thank you all for being here. And by the way, I did catch that comment, Tony. That's what she said. I did catch that comment. I saw it, and I want to thank you all for being here and keeping us company and always supporting the cause. And remember, do us a favor. We don't really like to ask you guys for favors much, but you know, you see us tweet about like the F.A.C.E show, give us a simple retweet. You know, you see us on Instagram or Facebook or any of those social media platforms, give us a thumbs up. You know, those little gestures, you know, even if you're not a paying subscriber, those little gestures of support really make not only myself feel better or feel good, but our whole team as well. So thank you guys for the continuous support of what we do here. For those of you that are actual ForexAnalytix subscribers, I'm going to see you on the morning edge as we go build out our bias chart as we do every single day for the last 20 some odd years that I've done it with our traders. We're going to build out the bias chart in about 30 minutes, 35 minutes, 37 minutes from now. So I'll see you guys and gals there. Ryan, Stelios, thank you, gentlemen.
Cheers, guys.
Thank you, guys. Thanks, everybody.
Good luck today, folks. Remember, keep your eye on wrist. Whatever Ryan said.
Risks.
Risks. Keep your eye on the risks. Wrist. All right.
Risks and
All right. Keep wrist check. All right, guys. I'll catch you all.